Gold has recently surged to an all-time high, trading at around $3,300 per ounce, marking one of the most dramatic moves in the precious metals history. This represents a rise of nearly 30% just this year, building on a long-term trend that has seen gold steadily climbing for more than a decade. To put this into perspective, back in 2015, gold traded at roughly $1,100 per ounce. In just 10 years, its value has tripled, rising by around 200%. Even more striking, over the past 3 years alone, gold has appreciated nearly 90%, despite a backdrop of surging stock markets, rising interest rates, and claims that inflation had been brought under control. This raises a fundamental question. Why is gold performing so well at this moment in time? When gold moves this far, this fast, it usually signals something deeper than simple investor enthusiasm. More often than not, it reflects mounting uncertainty in the global financial system. Let's unpack the major reasons behind gold's astonishing rally. Broadly, there are 5 powerful forces currently driving the gold price higher, and together they form a perfect storm for a modern-day gold rush. 1. Fiat currency erosion and inflation concerns. One of the most significant reasons gold has exploded in price is the growing fear surrounding the erosion of fiat currencies, particularly the US dollar. Put simply, people are worried that their money is steadily losing value. Since 2020, the purchasing power of the US dollar has fallen by more than 20%. For everyday people, this has been felt most acutely in rising prices for essentials like groceries, rent, and utilities. Even as wages have increased, they often fail to keep pace with the cost of living, leaving many households feeling squeezed. At the same time, gold has done the opposite. Over this same 5-year period, gold has more than doubled in price. While dollars bought less, gold preserved and even grew purchasing power. This is precisely why people often view gold as a hedge against inflation, not a vehicle for speculation, but a way to safeguard wealth when traditional money weakens. The scale of money creation in recent years has intensified these concerns. Central banks, particularly the U.S. Federal Reserve, expanded their balance sheets at an unprecedented rate after the pandemic. Trillions of dollars were effectively printed and injected into the global economy in a short period. While this supported markets during a crisis, it also stoked long-term inflationary pressures and undermined confidence in fiat money. Gold, with its limited supply and thousands of years of historical trust, stands outside that system. It cannot be printed at will, nor can its supply be manipulated by policymakers. In an era of unprecedented monetary expansion, that characteristic has become extremely valuable. 2. The U.S. debt spiral. A second key factor fueling gold's rally is growing anxiety about the U.S. government's massive and growing debt burden. America currently owes over $36 trillion, and that figure is climbing every second due to persistent budget deficits. What worries investors isn't just the size of the debt, but the cost of servicing it. Because interest rates have risen in recent years, the U.S. now pays over $1 trillion annually in interest alone. That makes debt servicing one of the single largest line items in the federal budget, bigger than even defense spending. This situation is often described as a debt spiral. As interest payments consume more of the budget, the government must borrow even more to cover its obligations, which then pushes the debt higher in a self-reinforcing loop. Credit rating agencies have already taken notice. The U.S. has lost its perfect AAA rating from multiple agencies, signaling growing concerns about America's long-term fiscal sustainability. Governments have only a handful of ways to deal with debt of this magnitude. Raise taxes, politically unpopular and economically challenging. Cut spending, difficult given entrenched commitments and political gridlock. Inflate the debt away, arguably the most likely scenario. The third option means allowing inflation to persist so that future tax revenues, wages, and nominal GDP rise, while the real value of existing debt shrinks. From the government's perspective, this makes the debt easier to handle. But from an investor's perspective, it means the value of their savings erodes. That's why so many are turning to gold. If the only realistic way for the U.S. to manage its debt is through inflation, then holding dollars becomes increasingly unattractive. Gold, on the other hand, cannot be devalued by political decisions or central bank policies. It holds its worth across generations, making it an appealing alternative to fiat in times of fiscal stress. 3. Central bank buying, China, Russia, and beyond. The third major driver of gold's surge lies outside the United States. In recent years, foreign governments and central banks, particularly in China and Russia, have been buying massive quantities of gold. Traditionally, central banks held their reserves in U.S. Treasury bonds, which were considered among the safest assets in the world. By lending money to the U.S. government, they earned steady interest and held assets backed by what was once thought of as the most reliable borrower on earth. But confidence in U.S. Treasuries has eroded, not just because of America's debt situation, but also due to geopolitical risks. When Russia invaded Ukraine in 2022, the U.S. and its allies froze hundreds of billions of dollars in Russian foreign reserves, most of which were denominated in dollars. This action sent a clear message. Dollar-based assets are not politically neutral. They can be weaponized. That realization prompted countries like China, Russia, Turkey, and India to rethink their reserve strategies. Instead of concentrating their wealth in U.S. government bonds, they began diversifying into gold. Unlike treasuries, gold cannot be frozen or sanctioned. It carries no counterparty risk and is universally recognized as a store of value. The numbers are striking. In the past 3 years alone, central banks worldwide have purchased more than 3,000 tons of gold, one of the largest accumulations in modern history. China, in particular, has been aggressively stockpiling gold as it reduces its holdings of U.S. treasuries. In 2020, China accounted for 15% of foreign-held U.S. treasuries. By late 2024, that share had dropped to around 9%. At the same time, China faces its own internal economic issues, most notably in the property market, which has long been a cornerstone of wealth for Chinese households and institutions. With confidence in real estate weakening, gold has emerged as a more reliable alternative store of value. The global shift away from dollar dominance and toward gold is perhaps one of the most important structural forces shaping today's market. It reflects a fundamental rethinking by entire nations of what it means for wealth to be safe. 4. Geopolitical instability. The fourth factor driving gold's meteoric rise is the growing level of global geopolitical tension. In the past few years, the world has faced Russia's war with Ukraine, escalating conflict in the Middle East, particularly between Israel and Hamas, rising concerns about a potential confrontation between China and Taiwan. Each of these situations individually would have been enough to push investors towards safer assets. But happening simultaneously, they create a widespread sense that the global order itself is becoming unstable. Gold has always been a go-to refuge in such times. Unlike stocks, which rely on corporate performance, or bonds, which rely on government creditworthiness, gold is independent. It doesn't have political allegiance. It doesn't carry counterparty risk, and it doesn't rely on stability to retain value. When the world feels uncertain, people naturally seek something tangible and enduring. Gold fulfills that role better than almost any other asset. This is why we often see spikes in gold demand during wars, conflicts, or moments of political upheaval. The current global environment, filled with multiple flashpoints, has created a powerful tailwind for gold prices. 5. Shifting interest rates. Finally, interest rates are playing a crucial role in gold's resurgence. For most of the past 2 years, central banks, especially the Federal Reserve, were aggressively raising rates to combat inflation. Higher interest rates usually work against gold because they make yield-bearing assets like bonds and savings accounts more attractive. In such an environment, gold, which doesn't generate income, looks relatively less appealing. But that dynamic is changing. Inflation has cooled, economic growth is showing signs of slowing, and central banks are now preparing to cut rates. Markets are already anticipating multiple cuts in the coming year. As interest rates trend lower, the opportunity cost of holding gold shrinks. If cash and bonds pay less, investors have fewer reasons to avoid non-yielding assets. In fact, when real yields, interest rates adjusted for inflation, fall, gold often outperforms, since it offers stability in a world where money itself is being devalued. This rate shift is yet another tailwind for gold. adding to the momentum already created by the other forces we've discussed. The perfect storm. Taken together, these five forces, currency erosion, the U.S. debt spiral, massive central bank buying, geopolitical instability, and shifting interest rates, are creating a perfect storm for gold prices. Each factor alone would be enough to support a rising trend. But all happening at once has created extraordinary conditions that have propelled gold to record highs. The remarkable thing about gold's surge is that it isn't purely speculative. While some investors are no doubt hoping for quick profits, the underlying drivers are deeply rooted in structural changes in the global economy and financial system. Households are buying gold to protect against inflation and declining purchasing power. Governments and central banks are stockpiling gold to reduce their reliance on the dollar. Global investors are seeking stability in a world marked by conflict and uncertainty. Gold has always been about more than price. It's about trust, safety, and preservation of value. In today's environment, those qualities are more sought after than ever.